Hey everyone, John Henry here, slingshotfutures.com, and welcome to the daily market outlook for trading on 11/8 of 16, going into Tuesday, going into election day, so make sure to not lose sight of that. Now, the market outlook is where we take a look at the futures and the Forex, and we look at our big six markets. The main goal of the outlook is to create a plan for tomorrow so we can be as prepared as possible for tomorrow's price action. Now, tomorrow may be a little bit difficult to get prepared for given the elections and all of that fun stuff, but still we want to try to approach it as methodically as possible. So starting off with the big three on the futures, gold, crude, and the S&P. Gold had a relatively strong gap down, and you're going to see this throughout pretty much all of the markets. We had a big gap across the board. Now, what I'm referencing is the close that we had on Friday. Coming into Sunday morning, as soon as we opened with a massive gap lower, and it just kept running away. Now, eventually, this gap at 1305.2 will want to be filled. The market doesn't like leaving open objectives like that. But as we can see, the bears weren't really joking around. We had a lot of bearish pressure to the downside, so the sellers have to be respected. The overall downside momentum that we're getting right now shows us that if we do continue this bearish trend, we're looking for the bears to follow a major objective down at 1276.1, down to 1274.5. So what I would really love to do is see the market pop back up, get a little trap above this cluster of highs into that 1284.1 to 85.1 area, look for a shorting opportunity inside that location to drop the market back down to finish that objective off to the downside. So that's kind of the game plan going into tomorrow. Now, with tomorrow being elections all day, may be pretty slow, right? It's hard to anticipate what to expect, but we'll play it by ear on gold. Right now, looking to short, but I want to sell a little bit further up at a better price to finish off that major objective to the downside. Jumping on over to crude oil. Crude oil also had a relatively large gap up, but this one actually filled. They pulled down, they hit the gap fill at 44.13 with a massive, massive reversal. They went into a little bit of consolidation here and aggressively broke higher. So that major rejection off of that gap fill, that's really what we want to see for all of the markets, is for them to come back and fill that objective. Now, at the moment, after that big drive, we've had some massive bullishness. They really haven't given up. Essentially, what took them from 4 o'clock in the morning down to 11 o'clock, they took back from 11 o'clock until 5 or so. 3 or 4. So, very aggressive bullish momentum. Now, after this big run higher, we have a major objective not too far away anymore, up at 45.04, and that's the major bull target, but also major bear resistance. And the big reason behind that is we're starting to get above that prior swing, and this is the major swing after cycling from high down to low, back to high. We're probably going to see a range. So this area up here, 45.04, is going to be a huge line in the sand for potential selling pressure back down. If you are looking at buying, I really don't want to buy until we at least pull back to the most intermediate, pull down that we've had so far, which would be right here, and that's from 78 to 81. Now, that area inside here, again, that is going to be the most aggressive, and you'd really want to see them trigger this area before they hit the target at 45.04. If they hit the target at 45.04, pretty much all long possibility goes off the table until we can get a slightly better pullback, maybe down to 44.70 or so. So for right now, if I am going to be buying, I want to be buying low on a pullback between 44.81 and 78. If I'm selling, I want to see the buyers get their targets filled at 45.04 and then start looking for a possible topping formation. And then we have the S&P. Now, the S&P also has a massive gap higher, and that gap higher is at 2081.5. This big run higher that we've had, we stagnated for a very long time. We opened up, huge gap, and we really didn't go anywhere on the market until 10 o'clock when we started to actually break out higher. Now, that movement, that breakout movement that we've had, that's seen a massive amount of bullish pressure, continuing the market to drive higher. Now, the situation that we're running into right now is we have a very extended trend. It's been going on for a very long period of time, and we have some of the biggest candles of the day forming right now. That's not a sign of continuation. That's more often than not a sign that the buyers are done. They don't want to buy high anymore, and they want to take profit, and that usually leads to a pullback, if not now, very soon. So don't be surprised to see this pullback and drive the market lower. If you're aggressive, you can look to short around this area if you get a good setup, looking for them to come back to the 21.2475 down to 21.24 area before you start considering becoming a buyer. And even then, that's pretty aggressive to become a buyer right here. Unless it shows you some really good strength, you'd almost want to see them pull even farther down to 21.21 to 21.19 just to get a little bit more meat in the pullback. So right now the buyers are overdone. I can't be a buyer way up here. I'm looking to sell up here for short-term moves. Would rather buy on a better pullback a little bit further down. So that's the broad spectrum of the futures. Let's jump on over to Forex, and that's going to be taking a look at the Euro USD, the pound dollar, and the pound yen. So the Euro USD first up on the list, another big gap. And as we can see, that big gap, they followed up with a massive amount of buying pressure. And that huge buying pressure doubled itself up almost to the tick up here before it found a huge chunk of resistance and it started driving lower. Now this drive lower is starting to form a nice little wedge, and we are getting fairly tight inside of this wedge, and really the downside is very obviously the objective. Sellers are very aggressive in this. There is no questioning the sellers at this point in time. Really the only question that comes to mind is, when do the sellers want to come back in? Right? So the big area of interest that I would love to see is for the market to drive back up, fake break out of the highs of this area, come back to either the swing low, which is only a little bit further up, or if we can get a really heavy correction up to 10,740 to 10,703 or so, would be a phenomenal place to start looking for shorts to finish off the move with one final leg to the downside before they figure out what they want to do here. So currently, if you're aggressive, the earliest way in would be right around 10,486 or so, but I would really like to see a heavy correction back up to finish that area of interest off at 10,703 to 740. Taking a look, next up, we're going to look over at the pound dollar. Now, the pound dollar, again, another big gap that we have here in kind of the same situation. We have a wedge that's forming. There's a couple different ways you can draw it. You can draw a really wide kind of expanding megaphone type pattern, or you can go off the most recent lows and see that we are finding a slight bottom down here. Now, the highs are still closing in. We're making lower highs, lower highs, lower highs. And in fact, this is the first time that they've been able to breach a lower high, right? This is the first time. And that being said, this still isn't a lower high that's come after a new low. That would be having to break all the way up here. So in terms of, what are we looking for? Aggressive sellers will be scaling in right here, looking for a down move to continue it back to the lows. The lows, there's not really a whole lot of room. You're looking for a possible rising area of support. By the time you get down there, it'll probably be around 1.2390 or so. So arguably, sellers are already in, but if we can get a heavier correction to really show that the buyers want to take over for the short term, get a nice ABCD correction up, trap that prior swing high and dunk that market right back down to the lows, that would be an optimal situation. So, as early as 1.24268, all the way up to 24,360, and this would be the hot spot right there. 24,360 is what I would love to see happen. So looking to sell on the pound dollar, looking to sell on the Euro USD. Let's see if the yen has any different pictures, and yeah, quite a bit different here. This kind of looks like the S&P. Huge gap up, good continuation of the upside, but towards, midday to the end of the morning session, end of the US session, we've been having a little bit of trouble up here. The buyers have continued to push in, which looks great. Nice ABCD leg back. And when you expect them to come back to the highs, they now have failed to come back to the highs. They missed it only by a little bit, but they still missed it. So we're seeing lower high. We're seeing another lower high, and arguably a minor little lower high. So the buyers are running out of steam. Generally, what that means is the buyers no longer want to buy high. It's already way too high. They want to buy low, and we can see that they already are off of that prior swing. Massive amount of support right there. Now, how many times can you buy a prior swing? That's a good question, right? It really depends on the context, and right now, yeah, I really wouldn't want to buy this swing low, maybe the overall low, and even then, they've already technically kind of trapped that area. So if they want to pull down a little bit further, the much better area would be this kind of bouncing back and forth that we had over here from the high to the low, where the buyers really took over and swarmed in. That would be a beautiful location to look for the buyers to come back in and reload. They don't want to buy high, and we already know that, so we're looking for them to want to buy low. The big area of interest in that case would be down here at 104.295 down to 104.255. But again, if you are aggressive, you can potentially start scaling in if you're feeling, again, a little bit aggressive, maybe go smaller size. But 104.421 would be the initial area to start scaling in for a run back up towards the highs. So a little bit of a different picture there on the dollar yen. And again, a lot of this analysis that we're doing right now, it's good to have a plan for tomorrow, but you have to also understand what tomorrow is going to be like. Tomorrow is election day. This is one of the most heated elections that I've seen in a long time, and with this amount of back and forth, tomorrow is going to be one of two things. Either hyperactive all over the place, or it's going to be really active in the morning because everybody wants to get in, get out, and then it completely falls asleep. So we really need to play it cautious tomorrow. Just, keep that risk in check as you're trading through tomorrow. And once you hit your goal, don't keep trading. You're much better off just leaving it in the account and calling it good. So that's going to do it for the nightly outlook for trading on 11/8/16. Make sure to rest up, get some good sleep, because tomorrow you might need to feel pretty rested. You might have to grab the caffeine depending on if it slows down or not. Outside of that, though, make sure to have a plan, trade that plan, follow your rules, and you will do just fine. Until tomorrow, we will see everyone later.